Well, good afternoon. Thank you for joining us. This is another of the GFDA board learning sessions. We're talking today about the lending, what we do to help things happen in the Golden Triangle and statewide that wouldn't happen without our lending support. We have with us this afternoon Jill Colas, who's our Vice President of Lending, has been with us a number of years now and has done an absolutely fantastic job with our lending program. And Michaela Turnquist, who joined us at the beginning of 2021 and has already proven to be a great addition to our team. So welcome.
Thank you.
Thank you.
Jill, why don't you start out and give us an overview of what lending does and what your role in it?
Sure. So overall here at GFDA, our lending is really designed to work with clients to provide gap or bridge financing. We have brownfield cleanup funding, and we also do have SBA 504 loans. And so we primarily focus in the Golden Triangle, but with our SBA 504 loans, we can go statewide for that program.
So what's your role in all of this?
So currently I dabble in a bit of everything. We start working with clients or any partners that come into the situation, bankers, and walk the client through what their financing need could be. And then we work them through the whole process as one of the tools in our in our tool kit at GFDA. And then I also work with our funding sources. So we have many different funding sources and compliance within those. So I maintain those relationships to make sure that GFDA as a whole is compliant with those.
So I know that we've got several different types of loans that GFDA does, gap, bridge, and brownfield. Do you want to talk a little bit about each of those?
Sure. Our gap financing really comes into play when the traditional banking is not enough with what the borrower can bring to the table. And so we might have a gap that will help the bank feel more comfortable doing their portion of the deal and allows the client to save some of their capital for business needs like working capital, that kind of thing. So that would be what a gap, kind of the form of a gap. Bridge loan is when there is a project and the project is kind of out in the future, and so they need that bridge to get to that end result where they can get more of the traditional banking. So we might come in and be okay doing that bridge loan till the final project can get done and be financed. And then our brownfield cleanup lending is if there is some hazardous or perhaps petroleum cleanup that needs to be done on a site. We do have low interest rate loans with that brownfield funding to be able to go in and clean that up. And then our last loan project is our 504 loan, and that is a government SBA loan that we can partner with a bank to be able to provide financing for fixed real estate and equipment purchases. The nice thing about the 504 is it is a long term, up to 25 years for real estate, up to 10 on equipment, long-term fixed interest rate loan. So that's a great benefit for the client, so they can have that security long-term on their fixed rate loan.
Now, I know for GFDA, we keep a couple of commercial loan officers on our loan committee, both for their expertise and to make sure that we're not financing anything that a bank or a credit union can finance. How do you work with bank and credit union loan officers to try to get them to do as much of a project as possible?
The first thing is very open communication with them and the client. We strive really hard to be able to keep everybody in the loop and find out really what the need is. The other thing we do is we can encourage other forms of building that bank relationship, whether it's establishing, encouraging the client to get accounts with them, set up secured CDs, things like that, that could perhaps build that banking relationship so the client and the bank can work together. We do want them to have that relationship, and we want to come in and second to that. We just want to partner with the bank to help these clients get deals done.
Now, can we do deals with any bank or credit union, or is it only certain ones?
No, we can do deals with any with any bank or credit union. We I mean, I guess you'd say we do deals with the clients. And so if the bank brings us a deal and they're willing to do part of it, we can certainly look at that gap or that bridge.
So Michaela, I think you quickly learned when you joined us that we're small but fairly complicated. So
Yes,
what is your
definitely.
role in on the lending side of things?
So I work primarily with the compliance side of the loans. I help or assist the client through the application process into closing, and just make sure that we have everything in order to have a secure loan, as far as making sure that we're meeting the requirements of our different loan funds. After closing, I assist the client in their day-to-day servicing of their loan um, through open communication, making sure that they're still being successful. And that way, if they do have an issue that comes up, we're more proactive instead of reactive, and I can get them to a team member that can assist them if they need it.
Excellent. So I don't think I've ever counted. I don't know how many fingers I've got, if I have enough fingers. I do know how many fingers I have, but I know we work with funds from a loan capital we've secured from the Economic Development Administration, the U.S. Department of Agriculture, the Montana Board of Investments, the Montana Department of Commerce, the CDFI Fund, the Community Development Financial Institution Fund at the Treasury. We had state small business credit initiative money, but that has since been defederalized, so it became unrestricted for us. We use Environmental Protection Agency money for our Brownfield Fund. We use both city and county community development block grant funds. Am I missing any? That's a lot of different agencies to keep track of. And then, of course, Jill, you mentioned the 504 program, where we're actually acting as an agent for the SBA. Those loans don't sit on our books, and those are done through High Plains Financial. I try to explain to people that GFDA is an economic development CDFI certified by the Treasury Department. High Plains Financial is a certified community development corporation by SBA, and we needed to keep them separate in part because just the vagaries of the restrictions on the board of directors. So High Plains Financial has a separate board. It's a separate nonprofit. We are allowed to have a couple of board members who serve on both boards. So Jill, walk me through, is there a typical deal? How much of a gap do we end up on average filling?
No, I don't want to say there is any typical deal. But in the nature of our business, we deal with clients that can't get 100% bank financing. So every deal is very unique and different. We've worked with businesses that have been very small loans, up to major development companies that are doing major developments in Great Falls. So that is what is, I think, very unique, and I'm very proud of it here at GFDA. But a typical, if you just want to say what we are typically looking at, is a client that the bank is looking at it and they say, well, we're comfortable doing 70%, 65, 70%. And the client maybe has 15 to 20% equity that they can bring in to the deal. So that leaves us with our gap of 10 to 20%. That's where we would like to be. In there, we typically have higher risk because we are in a position that is behind the bank. And so that is why we are that smaller piece of the puzzle, if you will.
Well, I looked at the list recently, and we have done, in some cases, we've done 100% financing on some micro loans when the client just wasn't bankable yet. But our goal, as you mentioned, strategies to get them bankable, all the way up to being less than 2 or 3% of a deal, but still critical to putting together the overall package.
Yeah, I would say we want to be there to be able to meet whatever need that client has, big or small. And one thing that's very unique about us is that we're willing to meet and listen to what may be the hurdle and look at all the different ways that that hurdle can be overcome. And it's not always a financing and capital need. And by having open communications with our banking partners and with the client, we're often able to help in other directions. That's just not that financing piece.
Now, Michaela, I know one of the projects you've been working on is helping Jill select new loan portfolio management software, and we're going to be soon installing the T system from Common Ground, Common Goals software. What do you think that new software is going to enable us to do?
I think it's going to really take us to the next level as far as even communicating with our clients. It'll allow them to submit their application online. We can track it as well as the client so they can see what's still outstanding in order for us to fully be able to underwrite that application. It's also going to be a great tool for Jill and I to communicate with the client as far as different reporting requirements that come annually due to the typical loan structure, submitting financials, and the client even to check the status of their loan themselves, what their interest is, what their activity has been. So I'm really excited for it.
Excellent. Well, is there anything else that you think our board members should know about our lending operation?
I would just, reiterate the fact that no project is too small. And we would help and entertain any entrepreneur that comes in with a need and listen and help solve any hurdles that they may have. We offer a lot of tools here at GFDA, and I'm very proud of how we can assist them.
Well, I particularly I started my career on the finance side, and I've always gotten great satisfaction out of it. I know that the deals that come to us, each one is unique and each one is difficult by their very nature, because if the banks or credit unions, and we're really blessed with a whole array of very aggressive and good bank and credit union lenders in the area, which is wonderful. If the deal was easy, they'd figure out a way to do it. So we truly lend into things that otherwise wouldn't happen. Now, the 504 is a little bit different because that's really saving equity for the borrower as well as interest rate over time. That's a bit of a different structure than the gap and the bridge loans that we do. Well, thank you very much for your time. I really appreciate it. You're both doing a fantastic job. I just added things up, and here we're sitting today is May 4th. And since January 1st, we have closed or issued loan commitments for $9,162,170 and $205,000 in brownfield cleanup grants, which we can do out of our EPA fund to nonprofits and public agencies. That's almost 9.4 million. that is a record for us by any means. So our lending is growing by leaps and bounds, and all due to your hard work.
It's been an exciting year so far. Look forward to the
Yeah.
rest of it.